Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello and welcome to the latest edition of InvesTips from the CIO's desk. My name is Steve Brice, your host for this series of educational podcasts. Have you ever heard about the idea of the middle child syndrome? It's the belief that the middle child often gets overlooked, not quite as celebrated as the eldest and not quite as doted on as the youngest. In the investment world, hybrid mutual funds are a bit like that middle child. They sit quietly between equity funds, which focus on investing in shares, and debt funds, which focus on bonds. They get far less attention, yet they can play a very important role in an investor's portfolio. Today, let's talk about why hybrid funds may deserve a closer look. So firstly, let's discuss what are hybrid mutual funds. So at their simplest, hybrid mutual funds invest in two mains of assets: equities, which aim for growth, and bonds, which aim for stability and income. By combining both, hybrid funds aim to strike a balance between growing your money and also protecting it from sharp ups and downs. And this is why they're often described as the golden mean, the middle ground between risk and safety. These funds are professionally managed, open-ended, which means you can invest or withdraw your money easily. And thirdly, they're designed to suit medium-term goals, where you want some growth but also peace of mind. And fund managers who manage these funds generally use three key ideas. Firstly, asset allocation, so what proportion should they invest in equities and what proportion should they invest in debt? Second, diversification, so spreading investments rather than relying on one source of return or one area. And thirdly, correlation, so trying to avoid assets that move in the same direction at the same time. Now, there are also different types of hybrid funds. So not all funds are the same, of course. They come in different styles depending on risk appetite and investment goals. So firstly, you may have conservative hybrid funds focused on protecting capital and generating steady income with more invested in debt or bonds than equities. They may suit investors who prefer stability or are later in life. There's also balanced or moderate hybrid funds. These typically split investments more evenly between equities and debt, so they aim to balance maybe a little bit more growth, but with some protection, and sit firmly in the middle of the risk spectrum. And then finally, you have what we call aggressive hybrid funds. So naturally, these invest more heavily in equities, with the aim of generating higher growth. They would still be less risky than pure equity funds, but obviously they are higher in the risk spectrum than balanced or moderate funds. Now, some hybrid funds are also designed around specific objectives, such as target date funds, which may gradually reduce risk as you approach a future goal like retirement, income-focused funds, which aim to provide regular income, or multi-asset funds, which may layer in some commodities or gold for added diversification, so not just stocks and bonds. So finally, who might consider hybrid funds? Well, actually, we think they can be useful in several common situations. If you're just starting out and have limited money to invest, hybrid funds can offer an easy way to invest in a diversified and professionally managed portfolio in a single investment, often at fairly small amounts. If you feel uncomfortable with the ups and downs of share markets, hybrid funds can provide a gentler entry into investing as well. And they can also support goal-based investing, such as saving for education or retirement, by encouraging discipline and a longer-term mindset. So in summary, we think hybrid mutual funds can help form the foundation of a portfolio. They sit in the middle of the risk spectrum, not chasing the highest returns, but not avoiding risk altogether. They're about balance. So if you're looking for a practical way to combine growth and stability, hybrid mutual funds may be worth putting back in the spotlight, rather than being outshone by pure equity or pure bond funds. Thanks for joining us today. I hope you enjoyed that and found it informative, and I will look forward to talking to you again soon. Please take care.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.